Hey everyone, Marvell Technology CEO said some pretty shocking things that surprised me, and I think you're going to be surprised as well. You're not going to believe the things he said, and it's the difference, the degree of magnitude of difference in its various business categories that are the most surprising. So I wanted to share that with you in this video, and I think you're going to find it really informative for this innovative company. So let's jump in, let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So, first of all, the CEO talks about all of the negative, right? And let's start with the negative and then we'll look at the positive, okay? And we'll see the big difference here. The CEO saying that they expect revenue from their overall carrier end market to decline in the mid 40% range on a sequential basis. From the previous quarter to the current quarter, they expect the carrier market to decline by 40%. That's a huge decrease. The CEO saying the reason for this is that the carriers spend so much money upgrading to 5G technology that they're now kind of tightening their belts and reducing capital expenditure, and that's going to hurt Marvell Technology. So moving on, they say for the fourth quarter of fiscal 2024, they forecast enterprise networking revenue to decline in the mid-single digits sequentially on a percentage basis. Again, let me reiterate, sequentially means from the previous quarter, so quarter over quarter. If the company is comparing to the previous year, the same quarter, they'll say year over year. So in this case, it's quarter over quarter, declining mid-single digits. And I've said this before in previous videos, mid-single digits from management usually means 4%, 5%, or 6%. Low single digits means 1%, 2%, 3%. High single digits means 7%, 8%, or 9%. So when the CEO is saying mid-single digits here, he means 4%, 5%, 6% decrease from the previous quarter. Now, looking to the fourth quarter of 2024, they expect revenue from their overall auto and industrial end market to decline by approximately 20%. 20% decline from the previous quarter, and the bulk of that is coming from the industrial end market. The CEO saying that revenue in this segment is choppy and lumpy, and it goes up and down, it's volatile. So no real secular tailwind or headwind there, just because of seasonality. It's a choppy market. You see these ups and downs in that market. So far we've looked at three categories of Marvell Technology's business declining meaningfully from the previous quarter. So moving on, the CEO says that heading into next year, while we don't typically guide beyond a quarter, we expect softness in demand to impact revenue from our enterprise and carrier markets into the first quarter. So not only the fourth quarter, but also the first quarter. So for 2 quarters, that market is going to suffer. They also anticipate a significant reduction in consumer end market revenue due to seasonality in demand and the completion of deliveries for an end-of-life program in the fourth quarter. So not only is this headwind going to continue for the fourth quarter of its current fiscal year, but it's likely to persist into its next fiscal year as well. So a lot of downside there from Marvell Technology. But if you've been following the stock, you know it's up significantly. So what gives? Why is the stock price up when there's all these headwinds? And the answer is simply AI. So in the meantime, while they have all those headwinds, their data center revenue is growing rapidly, reflecting our emergence as a key enabler of accelerated computing, in other words, AI. We project data center revenue driven by the ongoing strength in their connectivity solutions inside and between data centers to grow over 50% of our total revenue in the fourth quarter. So while there's all these headwinds in the business, the AI segment is going to bail out Marvell Technology. It's going to grow to over 50% of their total revenue, and then it's going to grow to consist of more than 50% of its overall business. So that's why investors have been enthusiastic about Marvell Technology and Marvell stock, because of its position to benefit from the rising effectiveness of AI. And you can see here Marvell Technology stock price in the last year, how it has risen, trading at $70.77 as of this recording, almost near its all-time high, reached just above $72 per share. It's been up significantly in the last year as investors have gotten more and more information from the rising effectiveness of AI, and demand continues to increase more than anticipated. Longer term, Marvell's operating profit margin has fluctuated significantly, right? It's had operating profit margins as high as over 20%, but it's also been negative for several times. Once it was negative 30% in a trailing 12-month period, and in its latest trailing 12-month period, negative 7.31%, although that's expected to turn around and turn profitable over the next 2 years. So it's a cyclical business, up and down, and you're noticing that in several parts of its business, it's in a cyclical decline. And in one part of its business with artificial intelligence, it's in a cyclical uptrend. So that's the inner workings of Marvell Technology. And similar story, although the volatility, the cyclicality is not as pronounced in its cash flow from operations to sales, you do see this big drawdown here close to negative 25%, but then a sharp upward trend, and you see a more stable cash flow from operations to sales compared to its operating profit margin, 21.37% here in this metric compared to negative in the operating profit margin. The main reason for this is non-cash expenses like depreciation, amortization, and stock-based compensation that needs to be recorded on the income statement as cost, as expense, but on the cash flow statement, those are not cash expenses, so they don't decrease your cash flow from operations. The impact they have on the business longer term is it goes to dilute shareholders because you're paying employees with stock-based compensation. You're giving them more shares, and that's diluting existing shareholders, but it's keeping the company positive in terms of cash flow from operations. It's often used in tech companies that like to give employees some upside potential, right? Employees will be more interested, more invested in the company if they have ownership. And so they'll produce better, they'll be more productive if they feel like they're going to share in the upside. So Marvell Technology is trading at a forward price to earnings of 25.02, near the lower end of its range in the last 3 years, going all the way back to July 2021. It's been lower briefly, right? Trading at a forward price to earnings of around 16 briefly in early 2023, but rarely have you had an opportunity to get Marvell Technology stock at a lower valuation. So I have Marvell Technology stock rated as a buy. I think the upside outweighs the downsides from all of its other businesses in cyclical decline. I think the upside from AI outweighs those risks, and the favorable valuation, in my opinion, makes it a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.